Welcome to the Life Self-Mastery Podcast, where we bring in entrepreneurs who have created online businesses and improved their lifestyles. Here's your host, Rohit Malhotra.
Hi everyone, this is Rohit from Life Self-Mastery, and I'm excited to have Andrew D'Souza, who's the founder of Clearbanc, which is the fastest, most affordable way for founders to fund their businesses. Clearbanc invests anywhere from $10,000 to $10 million in thousands of companies using data science to identify high-growth funding opportunities in less than 24 hours. Clearbanc's portfolio spans businesses across the United States, Canada, and UK to some of the fastest growing consumer brands today, like Leesa Sleep and Public Goods. Andrew is an alumni of University of Waterloo. Welcome to the show, Andrew.
Thanks, Rohit. Great to be here. Thanks for including me.
Awesome. So, you have had a great journey. You were born in India, then you went to US and then Canada. How did you get into this crazy world of startups, and what led you to build Clearbanc?
Yeah, it was a bit of a random walk, a bit of a random journey. So yeah, I was born in India. My family's from Goa. I was born in Bandra and in Bombay, and moved to Chicago during the Michael Jordan years. For anybody who's watching the Last Dance show, and then moved to Canada when I started school and studied engineering at the University of Waterloo. I thought I was going to build and design cars. That was my passion growing up, and then realized that the auto manufacturing industry was not as exciting as I thought it was going to be. So I spent a couple of years after graduating with McKinsey in management consulting, and I think I really missed building. I love the strategy component of consulting, but I actually missed the accountability and the hands-on work of building. And so after that, I was looking at leaving Toronto. There wasn't much of a startup ecosystem, and I was going to move to Silicon Valley, and I got connected to someone, actually, maybe many of your viewers know, a guy named Chamath Palihapitiya.
Yeah.
And he was leading growth at Facebook at the time. He was originally Canadian. He was a few years ahead of me at Waterloo, and was leaving to start his fund called Social Capital. And so moved out to San Francisco, and I ended up joining one of his very first portfolio companies, and it was a company called Top Prospect, and it was in the recruiting space, just built on top of the LinkedIn and Facebook APIs to help companies identify and attract better talent for their growing businesses. And it was an exciting time in Silicon Valley. It was one of the first seed investments out of Andreessen Horowitz. Jeff Clavier and Softtech were all investors, and got to meet a lot of exciting people. Met Stuart when he was starting Slack. Before it became Slack, it was sort of Tiny Spec. It was a mobile game. Met Kevin and Mike when they were building Bourbon, which turned into Instagram. And these were all sort of early Andreessen Horowitz portfolio companies. But probably the biggest realization for me was many of the entrepreneurs and the founders that I met in Silicon Valley were no different than the people back home in Canada out of Waterloo that were building companies, other than the fact that they didn't have access to capital, and they didn't have access to the media attention and sort of the profile that many Silicon Valley investors had. And so a big part of my mission was, how do we democratize that, and how do we level the playing field a little bit?
Interesting. And, you've been a serial entrepreneur. You've started, businesses before Clearbanc. Does it help to, get into the startup world after your graduation, working in a big company for some time and then get into startups? Or do you think, it does not really matter if you get your hands dirty in a smaller, scrappy startup beforehand?
Yeah, I think in some ways, my time at McKinsey almost was a hindrance because, paints you as a risk-averse, sort of overly analytical person. And so, when I moved down to San Francisco, I would tell people, that I was a Waterloo engineer before I was a McKinsey consultant.
Right.
And that was like, that was what got me some street cred. So I don't know if big company experience is that valuable anymore. I think if you can take a meaningful role at a high growth company and your career can accelerate alongside it, I think one of the biggest things is if you're energized by the work that you do every day, you're going to do better work, which means your career is going to advance faster. And that is almost, that's almost more powerful than anything else, is finding a role and an opportunity and an environment and a team and a mission that really gets you energized and gets the best out of you. And then just continuing to look for more and more opportunities, whether it's within that company or to do your own thing or at another company. But being open to opportunities that the world throws at you, and continuing to sort of heat seek and find that perfect match for your skills and your passion, your energy within the companies and the opportunities that are in front of you.
Got it. And I read that around 50 to 80% of ad spends are getting into Facebook and Google Ads. That's so consumer facing startups. Why is that being the case? And how is Clearbanc trying to help our founders so that they're not able to liquidate most of their stake into spending ads on these platforms?
Yeah, well, look, I think this is one of the biggest things that I realized. So after working at Top Prospect at this company with Chamath, I joined a couple of other early stage companies, and part of my job, because I'd spent some time in Silicon Valley, was to help them raise capital. And I was leading sales and marketing, and then also spending at least probably half my time fundraising. And I think what I realized was, the uses of capital are just as important as the sources of capital. So if you're investing in R&D and you're hiring a team of engineers and data scientists, or you're investing in product development that you're not sure if it's going to work, you don't know if it'll take 1 year or 5 years before that investment will actually, bear any fruit, then equity is a great financial instrument for those uses of capital. So if you're not sure about your business model, you're not sure if you found product market fit, you're not sure about your unit economics, equity is actually the right, that's where you want to be spending your equity. But in recent years, what's happened is equity investors have realized that they can get a better risk-adjusted return by just funding repeatable growth, right? It's easier for me to keep funding more and more salespeople or funding more and more ad spend than it is for me to fund R&D, which is hard to quantify the risk associated with and the return. And so that's where I think a lot of entrepreneurs get screwed, is they give up more as they get more and more successful. They give up more and more ownership and control of their company to fund their growth, and that's really the problem we're trying to solve at Clearbanc. Is if you're spending so much of your budget on repeatable activities, buying inventory, shipping, advertising, sales, infrastructure. If you're a B2B company, you're spending on AWS and Salesforce licenses and things like that. Equity starts to feel like a very expensive financial instrument. And so we've designed an instrument that's more well suited to these companies, where we basically say, we'll give you, $100,000 or $1 million, and you give us 5 or 10% of your sales until you give us that amount, our initial investment, plus a flat fee. And that gives the entrepreneur a lot more optionality, maintains, their ownership and their control, and allows us to continue to fund them as much as they need to achieve their objectives.
All right. And, what metrics are important for you to, process loans to startup founders in the D2C space?
Yeah, I mean, it's the unit economics. We sort of look at return on ad spend or CAC to LTV, repurchase rates, return rates, how saturated their markets are getting, and if they can actually increase their marketing budget without seeing degradation of their return on ad spend. And then we benchmark. So we understand, is this a top 10% company, or is this a bottom 25% company in these categories? And that helps us assess, the viability of the business. And it also says, we try and use data to identify product market fit, right? So our customers continuing to buy this product over others in the category. And so we try to make the process as simple as possible for the founder. So it's literally just connecting your online accounts, and we can ingest all of this data, and then our systems will process the data instantly and produce a risk profile and a revenue profile of that company. So it's really about all the online accounts, your eCommerce platform, your payment processor, your ad accounts. We're looking at your bank transaction data and your accounting data as well, and continuing to add additional sources of data to give us a new lenses and new views on the viability of these businesses.
Right, and the whole process takes 24 hours for you to decide whether and that company gets the funding or not.
Yeah, and it's often instant. Some of the larger companies with a lot of transaction data that we have to process, it can take a bit longer. But yeah, usually within minutes we can make a decision and then execute the documents and fund within 24 hours. That's our ambition.
Got it. And other than Facebook and Google Ads, which has really helped a lot of e-commerce companies to ramp up their sales, what are the distribution channels should D2C brands look at when they're looking to build their businesses? Because PR or content marketing does take time, even though they're great assets. But do you think there are other distribution channels which are also coming up for D2C brands?
Yeah, so there's a couple of different ways of answering that, right? So one is the channel that your customer, that you find your customer, and what does the customer journey look like? And then the second is the sort of what's the platform you transact on? And these things are starting to merge. I mean, we saw the Facebook announcement where Facebook is now, basically creating a storefront where you can transact on platform.
Right.
Amazon, for example, is, it's been a marketplace. Now they've got a massive ads business. So you can, spend on discovery as well as transact on platform. And, if Amazon is any indication, I think the Facebook shopping experience is going to be a much improved conversion rates just because it's all happening in platform. So I think it's important for companies, especially as you start to get to scale, to be omni-channel, ideally on both, right? You want to be wherever customers are shopping, you want your products available, whether that's Amazon or Walmart or Direct or Facebook or eBay or whatever. And then you want to figure out the right media mix. And this is one of the things that we're really starting to invest in is what is the optimal media mix for a company in a certain category of a certain scale, right? So should they be spending, 40% on Facebook and 20% on Google? How much of it should be on Pinterest? How much of it should be, increasingly we're starting to see, TV or radio or direct mail being an important component of that. And so that's another, on the paid sort of media mix. And then, PR, SEO, these things can be really powerful. They are long-term investments and they work for certain types of products. They typically have to be like, you have to have a unique story about your product or about your founding story for that to work well, but it can be incredibly powerful, incredibly efficient if you can get those right and get those loops going. And then word of mouth, getting the, for lack of a better word, influencer channels working well, but it feeling, organic and authentic rather than pay for post. And spammy can also be really effective. We've seen that work well, and we've seen it not work well if it's not done well.
Got it. And do you think VC investing is happening only in the most important hubs and cities in the world? Since you were in San Francisco and also in India, places like Bangalore, Delhi, and Bombay is where most of the VC funding is happening. But do you think in future you'll have because of the remote culture and the work from home culture? Do you think more important companies would come from smaller places or places which are not the super hubs?
Yeah, I hope so. I mean, this is a big part of our mission, right? Is to tilt the balance, in favor of the founder, of the entrepreneur, wherever they are. And I think in a lot of ways, the people with capital have always decided what got built, right? And how it got built. And so if you had access to that capital based on where you went to school or who your, uncle is or, what you look like, or where you can get to easily, then you had an advantage in building your company and achieving sort of your ambitions and your dreams and creating what you want in the world. I think that our goal has always been to shift that balance of power and say, no, the people with the ideas, the people that are putting in their blood, sweat, and tears, that are actually trying to build something, those should be the people who decide what gets built. And capital is really a commodity, right? And you're just capitalizing that company to achieve something. Like we can democratize that. And so that's our goal. And so I think, especially in this new world where more people are going to be working remotely, collaborating remotely, we feel we're excited about the opportunity that innovation is going to be much more distributed, and capital is going to have to become much more distributed. And so if you have to go and get on a plane and meet somebody in person to secure an investment, those investors are just not going to be successful in this new world. And so, we've never had that part of our interaction. We've always done everything remotely, and we're just starting to accelerate that.
Interesting. And do you think the VC model is up for disruption, not only in e-commerce field, but in other industries as well?
100%. Look, I think VCs provide a couple of things, right? They provide true risk capital, right. And that is at the very early stages or at key inflection points of a company, right? Where it is, I am making a very uncertain investment in something specific, and the upside of that investment is massive, but the downside is also unlimited, right? Or the downside is the loss of the entire investment. And venture capital is designed for that risk profile. And then VC provides signal, right? I think that's, they provide a signal to the rest of the world that, this is a viable company and not a scam, or, in most cases, they've done some diligence. And beyond that, I think a lot of there are very few investors who make good on the promise of value add, right? Whether it's network, whether it's operational expertise. I think there are many more investors that destroy value with sort of meddling and over involvement and sort of disempowering founders than there are the ones that are truly. But there's a very small segment, and fortunate to know some investors who fit into that, who are value add. But I would say the number who are value destructive with their involvement are actually more than the value add. And so if you think about breaking down risk capital and signal, there is way too much venture capital or growth equity or whatever term it is
right.
for the actual amount of R&D investment that's going in, or it's misallocated. And so I think there's going to be a structural shift in the way that hopefully we'll see much more venture capital go into things like curing diseases, right, and space travel and climate change and massive artificial intelligence to move humanity forward, and much fewer go into Facebook ads and recurring sales and things like that. I think that would be a great outcome for the world.
Got it. And do you also fund businesses which are on e-commerce platforms like Amazon and eBay? The problem with such marketplaces is that the owner doesn't own the customer. But do you also look at such sort of models where it's a distribution channel for the e-commerce owner to sell their products?
Certainly, yeah. So we'll look at products sold on Amazon or eBay or Walmart or wherever else, and we've got to understand that there is some inherent risk associated with it, but then there's also some benefits of, if you're doing well on those channels, more likely than not, you will continue to find, you will faster find organic discovery on your product. If your product is well rated and well reviewed and has a high purchase rate, it'll show up more often. And so there are benefits, and there are costs and benefits on those channels. This is why we really like and we recommend that every company, as soon as they're able to, and it's not too big of a distraction, try and get to omni-channel, because you're going to have some subset of customers who prefer to purchase on Amazon because they have Amazon Prime and they trust products on Amazon. And you have some subset of customers who prefer to purchase direct because they think they're getting a better price or better service, or they like the brand. And you're going to find people that discover you on both and want to transact on the other. And so I think omni-channel is almost certainly the future for any consumer brand and consumer product. And so, yeah, we certainly take that into account.
Got it. And we also have a lot of listeners from growing economies like India and Brazil, and a lot of other growing economies. Do you also look at such sort of markets to scale up operations, or are you only focusing on businesses in United States, Canada, and UK?
Yeah, no, we are. Look, I think one of our big objectives this year is international, right. And our plan is to be in as many countries as possible. There's some structural things, and there's some ways of going to market, and there's ways of moving money and things like that we have to navigate in each market that we enter. But yeah, 100%. Look, I think as difficult as it is for entrepreneurs in Canada and the US to raise capital, it's probably 10 times harder everywhere else in the world. And right. If we really want to fulfill our mission, we have to be able to make that as easy as it, regardless of where you are.
Right. And do you have any structure on how do you enter a new market, or is most of your team based out of Canada who looks at international expansion and operations in that country itself?
Yeah, so our team is almost all based in Canada. We've got a couple of people in the US.
Right.
So our team is all based in Canada, but we serve the world from our Canadian headquarters. Now, again, like in this kind of new world, doesn't mean that we couldn't hire people remotely to help us enter new markets and execute. But yeah, there's, we've sort of gone down the world from a country attractiveness standpoint, where we can enter and what it would take, and currency risk, and there's a bunch of interesting dynamics in terms of e-commerce penetration and startup formation and existing venture capital ecosystem and things that we pay attention to. So we've got sort of a checklist that we work through, and then we run through that, and we identify the markets that we think are most attractive, and then we sort of go down. We don't want to get too distracted by doing the whole world at once, but we try and go country by country. And the other interesting thing is there's many companies where they operate out of India or Israel or other places, but they're actually incorporated in the US, and we can work with those companies immediately. And so we have a lot of those companies as well. They operate somewhere else, they sell somewhere else, but their incorporation is in the US, and we can use that headquarters to transact with the company.
Right. And Andrew, you've raised around $300 million in last 2 years, and you've grown phenomenally in last couple of years. Why did you want to raise such a huge amount, and what are the growth plans for Clearbanc going ahead?
Yeah, I think at the highest level, it is how do we tip the balance of power in favor of founders, and how do we help founders win, right? This is sort of the driving mission of the company. We want to do that by capitalizing those companies efficiently and helping them spend their capital as efficiently as possible, and in order to create value for those businesses and those founders and those customers. And so I think in order to do that, there's a pretty heavy lift in there's a component of our capital, which is, the vast majority of our capital is actually just deployed to our founders, and we're going to continue to raise that capital. And our goal is to be, basically the biggest investor globally. Right. And I think we're already the largest in e-commerce in terms of number of companies funded, and probably approaching dollar figure. But our goal is just to be the largest investor, period. Fund the most number of founders, and continue to scale it. And then I think a big investment that we've made is in the data science side. And so being able to actually ingest all of this data, process it, make sense of that, build a forecast for the company from the outside in, and give them the right amount of capital at the right time, and then move the money and be able to kind of deploy the capital, get it back. So there's a lot of infrastructure, there's a lot of data science, and now starting to make some meaningful investments and actually helping them decide where best to spend the money. And so that's what I'd alluded to earlier is, things like media mix and how fast to spend the money in which channels and, over what period of time. So, I think those are the questions that every entrepreneur, thinks about. They often go to their board. Their board have a limited sample size. We have a much larger sample size to draw from, to be able to help them make those decisions specific to their business.
Got it. And, you mentioned in the mission statement that you're building a company for founders, by founders. So I wanted to understand, what sort of a culture goes into building a company like Clearbanc? Do you look what sort of an employee fits into Clearbanc, and who can service founders and make Clearbanc a big unicorn company?
Yeah, we hire mostly founders or former founders, people that have been through the challenges of launching a product, fundraising often, and either had success or failure in that process. And so I think when you talk to somebody at Clearbanc on the investment team, you're talking to somebody who's sort of lived in those shoes. And I think And then, that goes for our product managers, that goes for designers, that goes for our, engineers and data scientists as well. So it's a very entrepreneurial culture. It means that, that people, we really understand the customer incredibly well. And everybody in the company, top to bottom, believes in the mission and the objectives.
Interesting. And, I had to talk about the COVID, pandemic, which has happened all over the world. Has it really affected Clearbanc's business? And, how is remote work working for you guys?
Yeah, I think so. There's a couple of things that have happened, right? One, we've certainly seen the outcomes of the companies we've funded change. There's some companies that are unfortunately negatively affected if they're highly correlated with travel and live events, but the vast majority of our businesses have stayed relatively stable or increased demand because e-commerce as a category has gone up, and so there's a lot more people buying products online. And so the other thing is there are many more companies that are looking to scale up, but other sources of capital have dried up. The banks have pulled their credit lines. Their existing investors are not, investing more, or it's harder to raise, rounds fall through if they've been raising equity. And so I think all that is to say that there's more demand for new companies to partner with Clearbanc, and we're just sort of scaling up to meet that demand. And then for us, for me personally and for our company, because we've been a very entrepreneurial company, we have been a very in-person culture, right? There's an energy in our office that is very infectious. And so that's been difficult to replicate remotely. I think that's probably the thing that I miss the most is energy. We've tried to approximate it as much as possible. We do daily all hands and Zoom calls with the whole company, and try and replicate it. And I think the team has really stepped up. But it's certainly not, it's certainly something that I miss from our time in the office.
Right, and it's difficult to predict what's going to happen. But do you think it's like a V shape or a U shape sort of a recovery, or when do you think things across the world are going to get normal?
That's a tough one. I've been following. I've been talking to experts, listening to experts, and trying to understand, what it's going to look like. I think every economy is going to look different based on, how aggressive they are in terms of locking down and enforcing quarantines and restrictions, and then the recoveries are going to look very different. I think there's going to be some who are willing to take a bigger burden on their healthcare system and a larger infection rate for faster economic recovery or hopeful faster economic recovery, and that is a gamble that some governments are willing to make. And some governments are not, and it's really hard to know, how we're going to shake out of it. But I think the real challenge is, with such an interconnected global economy, as soon as things start to open back up, we will likely see a second wave, and it may be a global second wave. So hopefully we'll learn to work in this new reality for a period of time. But it's not. There's no. I don't think anybody who can actually paint the future, really can do that with any confidence.
Exactly. And so, Andre, I quickly want to do the top three. What's your favorite business book?
Yeah, probably my favorite is Principles by Ray Dalio. Read that a few years ago. Try and read it at least once a year, and have tried to live by as many of those in life and implement as many of those things as we can in the business.
Yeah, a great book. We'll put that in the show notes. And if you could go back in time when you started working on Clearbanc, what is the one thing you would have focused on or done anything differently?
I think now, knowing what we know now, I probably would have set us up for the ability to work remote earlier. So better documentation around decisions, more support for asynchronous collaboration. We had to do that sort of on the fly, and I don't know if we've still got it right. So I think, getting ahead of that and being able to support would have probably set us up, in a better position now.
Right. And do you have any favorite online tools, example, Gmail, Slack, Zoom?
Yeah, I love Superhuman. They're just, Rahul is a friend. We share a few investors, and use the product. It's made me incredibly efficient in processing email, and I've always I love their onboarding experience. I think they've just executed the business incredibly well.
Got it. And and what is the best way people can reach out to you and know more about Clearbanc, especially for founders who want to reach out for funding?
Yeah, so I'm just Andrew D'Souza, Twitter. You can just message us at online clearbanc.com, and it'll be fast. You can email me, but it's going to be I probably won't get back to you as fast as our team if you just sign up online at clearbanc.com. So I'm Andrew at Clearbanc, but find me on LinkedIn, Andrew D'Souza. Find me on Twitter, and find us at clearbanc.com.
Sure, thanks. We'll put that in the show notes. Thank you, Andrew, for taking our time and speaking to us. I really enjoyed your thoughtful insights.
Thank you. Great to connect, and appreciate you having me on.
Thanks for listening to the Life Self-Mastery podcast, where we teach you how to start and grow your online business. For more information, visit Rohit's blog at www.lifeselfmastery.com.